Hey traders, Raghee here. We've been talking about market structure. We talk about trends. One trend that has shifted now is crude oil. We've touched on this in previous videos, and I'm going to share something that we've been talking about in the premium video in the futures room, and that is what's happening with crude. So let's break this down so you can understand the setup, see the setup, and how I measure it. First of all, structure first. Red over red. We've got 5 sessions now where the 8, 13, 21, and 34 EMAs are telling us that the path of least resistance is down. Now, many of you are probably extremely fluent with buy the dip. Buy the dip really can be translated into there's an uptrend, and if it retraces, pulls back, we can buy it, buy the dip. On the flip side of that is sell the rip. Right? Sell the rip. What is that? Downtrend. The market bounces or rallies, aka sort of rip. Rip is usually kind of insinuating a swifter move to the upside. It could be sell the rally too. And then we would short into that. So it's the opposite. So sell the rip. The sell is coming as we get to the resistance of the 21 propulsion. This is the green dot. You see how the dot started back here? That tells us the 21, since this time in mid to late November, the 21 exponential is shortable. Here, right, there's some resistance. And once again, right here. The 21 propulsion is very cool because it's really the combination of 2 tools. Moving average crosses and a self-correcting exponential moving average. So if this is something you're interested in putting on your chart, here's what's cool. It's free, all right? No strings attached. It's honest to goodness free. We've made this tool available to members and non-members since 2016, 2017. You can put it on your charts right from within TradingView by going into the indicators. And if you're on Thinkorswim or TradeStation, you can download the ThinkScript or the easy language file right from the countdowntrader.com blog website, countdowntrader.com, simpler propulsion. So that 21 is where that short initially would trigger. The short's going to be valid, by the way, throughout the resistance of the wave. So throughout this whole area, you've got resistance in that short zone. So this would be considered the aggro leg of it. Right, so that's what we're looking for now, the movement back down to, well, I would say right around 65, okay? So that's crude oil. Now, could this mean oil stocks are going to weaken? Keep an eye on it, but let crude oil show that this downtrend's in place. That's the structure, that's the setup, and I'll see you all tomorrow, hopefully, in Charts and Coffee over at the Simpler Trading YouTube channel, our pre-game, pre-morning, pre-open show, 9 to 9:20 a.m. I'll see you then. Bring your questions. It's live Q&A. All right, until then. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.